Welcome to the deep dive. If you're looking to cut through the noise of quarterly reports and really get under the hood of what drives global tech, well, you're definitely in the right place.
Absolutely.
Today, we're doing a deep dive into Taiwan semiconductor manufacturing company TSM right after their, let's say, decisive Q3 2025 earnings came out.
And we've got this great framework, actually, 5 parts, looking at their operations, financials. It's designed to really dissect these results properly.
Yeah, it's quite structured.
And, our mission here isn't just to read off the headlines. We want to go deeper, understand the mechanics behind TSM's just, staggering performance.
Right.
We need to unpack what exactly drove that huge jump in profitability and how their tech dominance really translates into financial power. Why are they seen as this essential piece, almost a bottleneck for the whole AI expansion?
Exactly. So this deep dive, it's your shortcut to understanding TSM's role, but through the lens of cold, hard operational data. You'll walk away knowing exactly why the market reacted, the way it did, and what the real structural drivers are behind their growth. We're going to step through this framework piece by piece. Okay, let's get started.
Let's do it.
Now for slide 1, the at-a-glance scorecard. So let's start right at the top line because this was a pretty comprehensive beat. Total revenue, $33.10 billion US.
Yeah, and that was well above what the market was expecting. Consensus was sitting around, $31.99 billion?
Right, so a significant beat there. That's quite a margin.
And honestly, the profitability story, even more dramatic. Diluted earnings per share. That's the EPS number everyone watches, right?
Yeah.
Adjusts for potential dilution like stock option.
Conservative measure, yeah.
Exactly. That hit $2.92. Now, compare that to what analysts were thinking. The consensus range was much lower, hovering between $2.62 and $2.66.
Wow, okay. That's a big gap. That really points to some kind of operational surprise, doesn't it?
Definitely. And you saw that reflected immediately in the market reaction. Shares jumped up, trading above $308.70 right after the release.
Right.
About a 1.3% gain.
Confirming that bullish sentiment. But, okay, the real story here, as you often say, isn't just the beat itself. It's the quality of that growth.
Precisely. And this is maybe the first aha moment for you, the listener. It's in the year-over-year growth dynamics. Look, total revenue grew by a very healthy 30.3%. Solid.
Okay.
But then you look at the bottom line. Net income grew by 39.1%. And diluted EPS, 39.0%.
Hang on. Revenue up 30%, but profit jumping almost 40%. That's a noticeable difference.
It is.
That really screams operating leverage, doesn't it? But, you always have to ask, especially these days, was this just financial maneuvering? Like, did they just buy back a ton of stock?
That is the critical question. And the answer here is a very clear no.
Oh.
We checked the numbers, the weighted average outstanding shares, virtually flat. It stayed right around 25,930 million.
Okay, that's important.
It's vital. It means that nearly 40% jump in profitability. Purely operational. TSM didn't, pull levers to artificially boost the EPS figure. They just got significantly better at turning every dollar of sales into actual profit.
That clarity is key. Knowing the growth is organic, it's real. It means we have to dig into the how. How did they achieve that? Which brings us nicely to the source of that efficiency.
Exactly, the engine itself.
Moving to slide 2. The engine of profitability. So that accelerated growth we just talked about, that 39% jump, it was powered entirely by TSM's incredibly strong margin profile this quarter. I mean, these numbers are pretty staggering for a manufacturer, even a high-tech one.
Let's break it down. Think about their pricing power and just sheer efficiency. Gross margin came in at 59.5%.
Almost 60 cents on the dollar.
Exactly. After paying for the direct costs of making the chips, they kept nearly 60 cents of every single revenue dollar. That signals, one, really efficient manufacturing, but maybe more importantly, huge leverage when pricing their most advanced chips.
And the control extends further down the P&L. Operating margin, this is after R&D, admin costs, all that. 50.6%. I mean, you just don't often see manufacturing companies operating above 50%. It shows incredible expense control, not just production efficiency. They can reinvest heavily in R&D without killing near-term profit.
And the final number, the bottom line, net profit margin stood at 45.7%. Almost half of every dollar in sales drops straight to profit. So if you want the mechanical reason for that 39% EPS growth we saw back on slide 1, well, this is it. This margin profile explains it.
Okay. That question is why this quarter? How did that operating leverage suddenly get, so supercharged? What clicked?
Yeah, we can actually trace that acceleration. Look at the growth rates again. Net sales grew 30.3%.
Okay.
Gross profit grew faster at 34.0%.
Right.
But then income from operations that grew even faster still, 38.8%. This is like textbook scaling efficiency in action.
Meaning their costs didn't scale up as fast as revenue.
Exactly. The costs of running the business, cost of goods sold, R&D, sales, and admin, they all grew slower than revenue did. So all that extra demand, especially for the high-value chips, it just flowed right through this widening profit funnel, amplifying profitability almost automatically.
So the more high-margin stuff they pushed through, the more efficiently those huge fixed costs of their fabs got absorbed, making that profit line curve up sharply. It's a powerful cycle. But this whole beautiful structure, it really relies on one core thing, making chips that basically nobody else can.
That's the foundation.
Now for slide 3, the engine room business segment performance. So we need to look inside the factory, so to speak, to see where that pricing power actually comes from. And it boils down to the nodes, the nanometers.
Right, think of nanometers, maybe like density. Smaller means more power, more speed, better efficiency packed into the same space. And TSM, they dominate the cutting edge, the most advanced nodes.
And their Q3 revenue numbers absolutely confirm this focus on the high end, what they call advanced technologies, that's 7 nanometer, and anything newer. That category accounted for a whopping 74% of their total wafer revenue. 3/4 of their business is on the bleeding edge.
It's incredible concentration.
Yeah.
And then you break down that 74% even further.
Yeah.
Gets even more concentrated. The 3 nanometer process alone, 23% of revenue.
Wow.
And 5 nanometer was 37%. So just those two, 3 nanometer and 5 nanometer, make up 60% of their total revenue.
60% from the 2 most advanced nodes currently in mass production anywhere.
That is their competitive moat. That's the why behind the 59.5% gross margin we just talked about. These advanced nodes are absolutely essential for things like the most powerful AI accelerators, the chips in the latest flagship smartphones.
The really demanding stuff.
Are really demanding stuff. And for the biggest customers driving those sectors, think NVIDIA, Apple, AMD, maybe TSM is often the only foundry that has the technology, the scale, and the manufacturing yield to produce these incredibly complex designs reliably.
So they can essentially name their price within reason, because the alternative is, well, there often isn't one at that scale.
Pretty much. That technological near monopoly fuels the financials.
Okay, that fully explains the financial engine. But who's buying these chips? Where are they going? We should probably look at the application and maybe the geographical mix, too.
Good idea. That tells us about the demand side.
Moving to slide 4, application and geographical mix. So the tech nodes define the capability, but this mix tells us where the demand is coming from right now.
And the sources show a pretty clear picture here. The biggest driver, unsurprisingly perhaps, remains high-performance computing, HPC. That category includes the AI accelerators everyone's talking about.
Right.
HPC is the leader, accounting for roughly 46% of total revenue.
Almost half. That 46% figure, that's the direct link to the AI boom, isn't it? It really confirms that those fantastic margins we saw on slide 2 are being fueled by this just relentless demand for AI processing power.
Absolutely. The second largest segment was smartphones, making up about 33%, likely driven by new flagship phone launches using those advanced nodes too.
Makes sense. And geographically.
Heavily weighted towards North America. Typically accounts for over 65% of their total revenue, which makes sense, right? Given their key customers, NVIDIA, Apple, AMD, Qualcomm, they're mostly headquartered in the U.S.
So it shows that direct financial connection between TSM's manufacturing prowess in Taiwan and the success and demands of America's biggest tech companies. The demand source is concentrated, even if the end products go global.
Yeah, it highlights that dependency. The world's most innovative tech firms really rely on TSM's advanced manufacturing. It cements TSM not just as a supplier, but as you said earlier, kind of the foundational architect.
Okay, so we've looked at the beat, the incredible margins, the underlying tech dominance, and who's buying the chips. That covers the what happened.
Right. Now what's next?
We transition now, jumping ahead slightly, to slide 5, the road ahead management's outlook and key takeaways. So after a monster quarter like Q3, what are they actually projecting for Q4? Are they expecting this to continue?
Well, the guidance they gave seems highly confident. It suggests this strength is sustained, not just a temporary blip. So assuming an exchange rate, they use 30.6 new Taiwan dollars per U.S. dollar. Management is projecting Q4 revenue between $32.2 billion and $33.4 billion U.S.
So potentially even slightly higher than Q3 at the top end. And what about margins? Are they expecting those to hold up?
Critically, yes. Their margin guidance really backs up that sustainability argument. They expect gross profit margin to stay very strong, somewhere between 59% and 61%.
Wow, still right around that 60% mark.
And operating profit margin is projected between 49% and 51%. So yeah, they're essentially guiding for continued near-record profitability levels, even with typical quarter-to-quarter variations.
Okay, that sustained outlook really ties the whole story together, doesn't it?
It does. And the CFO, Wendell Huang, specifically mentioned strong demand for their leading-edge processes as the main reason for this positive outlook heading into Q4. It's basically confirmation that this high level of performance feels structural now, driven by ongoing trends like AI, not just a cyclical peak.
So if we were to boil this whole deep dive down, maybe into 4 key takeaways for listeners to remember, what would they be?
Okay, let's try. First, clearly, it was a decisive earnings beat. And it was fundamentally powered by the demands of the AI revolution, especially within that huge HPC segment.
Right. Second takeaway. The company achieved exceptional profitability, and that was driven by that powerful operating leverage. Remember, the 39% net income growth outpacing revenue. And crucially, it was pure operational growth, not financial tricks. Third, their technological dominance, that 74% of revenue from advanced nodes, heavily concentrated in 3nm and 5mm. That's the core economic engine. That's what allows those incredible prices and margins.
Nice.
And fourth, the confident outlook. The strong guidance for Q4, especially on margins, suggests this high demand isn't just a flash in the pan. It seems embedded in the global tech landscape now, giving pretty good visibility for continued strong performance. So putting it all together, TSM's Q3 results feel like a powerful confirmation. This company isn't just, selling components. It's genuinely providing the indispensable foundation for this whole current technological shift we're seeing.
Yeah, absolutely.
And using a structured framework like this, these 5 slides hopefully helps you, the listener, look past the simple headlines and really assess the underlying financial and operational reality with a bit more clarity.
Definitely. Now, before we wrap up, just the standard reminder.
Yeah.
This deep dive is purely for informational purposes. It is not financial advice, not investment advice, legal or tax advice.
That's right.
Any investment decisions you make should always be based on your own detailed research and due diligence.
And one final note on our process. This report was generated using an AI model, integrating data directly from TSM's official press release, along with publicly available market data. As always, all the information we've discussed today should be independently verified by you, the user. Like and subscribe to StockAnalytics.ai YouTube channel. Members get access to our growing library of all S&P 500 stocks and get priority requests for company deep dives.